Hi, today is May 20th. This is Mark and Richard Betts with ASAP Accounting and Payroll. We'll be covering the Paycheck Protection Program, the loan forgiveness, and updating you on guidance after Friday's May 15th release of the PPP Loan Forgiveness Application. The agenda will cover the PPP Loan Forgiveness Application, Form 3508. We will cover some guidance updates that we learned from that release, including these items, and then we'll be touching base on some ambiguities and possible updates, legislative updates and guidance updates remaining, as well as we'll touch base a little bit on where to focus your energies at this point in time, and then how ASAP plans to provide services and support to employers while they complete the loan forgiveness application. As mentioned, the PPP Loan Forgiveness Application was released on May 15th. It has four components to it: the forgiveness calculation form and the PPP Schedule A form. But it also has a Schedule A worksheet, which is the meat of the calculations that you'll be doing on your FTE comparisons and your salary wage comparisons. We will be doing a deep dive of all of those components and the calculations required at a later date. This is just going to be a quick overview to get some things out to everybody. Now let's look at the guidance updates that we've learned from the release on the 15th.
Yeah, the first thing that was unclear in everybody's mind is what is an FTE? Was it 30 hours, 32? Well, the guidance came out and definitely defines an FTE as 40 hours a week. And so this gets to be important in doing some of the calculations. But the full-time equivalent now is a 40-hour basis.
They also provided a simplified calculation method that we'll be going over in the deep dive. But essentially, anybody working 40 hours or more, you would count as one. And then anybody working less can be counted as 0.5. And then you would come up with, and that's per work week, and then you would create an average over that 8-week period of time.
Next item they gave a little bit of flexibility on was the 8-week start period. Originally, the 8 weeks was starting the day you received the funds into your bank account. And now they said you can have an alternative payroll 8-week period that starts with the first day of your normal scheduled pay period. So you may have gotten the money on, shall we say, a Wednesday, and your normal start of your next pay period would have started the next Monday. Well, in this case, you can use that next Monday as an alternative pay period, covered period, and your 8 weeks can start from that date. So we'll keep you posted on that, but it does give a little bit of flexibility in the start of the 8-week period.
It also provides a little flexibility at the end of the period so that you don't have to cram in or rush a payroll on that final date. It is going to be based on when those wages were earned. So let's say if June 10th is the final day of your 56-day period, then it would be based on wages from June 1st through the 10th if you were a semi-monthly employer, but you don't have to issue payments on the 10th. You can issue those payments on the regular scheduled pay date. Also, some things in the updates, we learned a little bit more about this methodology for wage comparison. We had a lot of concerns there early on because they were comparing salaries and wages for a 3-month quarter period versus an 8-week period, and no one was quite certain how they were going to have us perform those calculations. It does appear that it's going to be based on their average salary in the first quarter versus their average salary in the 8-week period on an annualized basis. And it appears it also is going to look at base compensation as salary compensation and hourly wage compensation. And we'll get into that in the ambiguities.
Next thing they did was outline the safe harbor criteria and the salary. Is it related to salary wage reduction? In essence, part of the original legislation anticipated that employers would not be able to get their employee levels both number of employees and wages back up to where they were before the crisis. And so they created what they call a safe harbor rule, allowing you, as long as by June 30th, you are able to get the number of employees and the wages back up to the level prior to February 15th, then you would be excluded from having any reduction in your loan forgiveness as long as you reach those levels by June 30th. And they clarify this as what's called the safe harbor rule. Next thing they did is clarify what costs incurred and payments made. This was an area we needed clarity on, to allow eligible non-payroll expenses like utilities and rents if they were incurred during the covered period but paid afterwards on a regular billing cycle. And this happens quite a bit, as you well know. You may receive your utility bill 20 days after the end of a billing cycle from your utility company. So as long as these costs were incurred during the covered period, they can be paid outside of the 8-week period and still qualify for the loan forgiveness. The other item is required to submit a PPP loan forgiveness calculation form and a PPP Schedule A, and I'll let Mark talk about that.
Yeah, so you're going to be required to submit those two components of the packet to your lender initially, and as well as it states what type of documentation will be required to paper the files to support the calculations. And so we'll go over that again in the deep dive and have some information in our help center about those items, and I'm sure the lenders will as well. One component here is you're required to retain these documents and materials that support these calculations, including any that are not on the worksheets, and that'll be the calculations that you have to do probably in Excel to compare FTE periods and salary wage comparisons. You'll need to keep all that data for 6 years, so hold on to those files and make copies, because if called upon, the SBA or the office of somebody can request those files.
You want to talk a little bit about ambiguities, the things that are still not quite clear, and we're going to need some more guidance on. And one is the annualized hourly wage comparison.
Yeah, I have a lot of questions on this one. Are they going to be looking at this based on the rate of pay? Because a lot of people come to me and said, I haven't cut anybody's pay. Now their work hours have dropped, or their commissions aren't coming in like they were before. They're not getting the same tips that they were before. Am I going to be penalized because they're working less, even though I'm paying them the same base salary and the same base compensation, and on an hourly basis, that is, for the hourly rate? And so it's a little unclear. I'm hopeful that they're going to allow some lenience there, but I would like to see additional guidance on that before feeling secure in our judgment there.
The other item that we're going to need input from the employers on is the hourly hours by week, because some of the calculations are based upon the full-time equivalent weekly data. As you well know, most people pay either bi-weekly or semi-monthly, so we know the amount of dollars paid in those periods, but we need to turn to the employers to look at their point-of-sale system or however they're tracking their time. In some cases, we provide timekeeping data, but we will need to collect the data from the employers to help them understand the hours worked in some of the calculations that will be needed.
Yeah, or you'll need it. A lot of times, if you have it, then we won't be doing those. The FTE reduction exceptions, there's a component in here that was added in the guidance in the last few weeks, and then also mentioned in this application, where if you have to make a termination for cause during the 8-week period, disgruntled employee of some sort that you need to let go, you have that ability, and they've provided some measures in there so you're not penalized for those terminations for cause. Also, if there's any reductions for any other reasons, if you've such as you've made an offer to employment and the person's refused to return to work. If you document those things, then they can be FTE exceptions. And they've made a provision in there, but the language in the document is a little unclear on how to calculate the average FTE value for an exception employee who was not there for the full 8 weeks potentially, or at all.
The next item, we mentioned safe harbor, and the safe harbor rule is extremely important because that enables you to calculate where you stand with number of employees and wages on June 30th. And we're looking for a little bit more details for determining the total full-time equivalents as of June 30th, just for a little bit of clarity. We'll keep you posted if we learn more.
Now, just a little bit of a legislative update. We're getting word that the House is expected to pass legislation next week, potentially to eliminate the 75% payroll cost rule that the Treasury added to this PPP program, and also to extend the timeline out potentially for 24 weeks. We all been hoping and pushing them to extend it, or make some adjustments for employers. There's word that a few senators have jumped on board to support the measure, but no word yet regarding Senator McConnell or the Trump administration, where they stand on that. The House bills are coming from Pelosi, so they have to essentially come together on some sort of update on this PPP that is agreeable to both parties. In addition, we've heard some continued guidance updates are expected. Mnuchin has made some comments to suggest additional guidance should be forthcoming.
The other thing we wanted to just remind our employers is you need to run your business as a business, and you shouldn't be making all your business decisions based upon loan forgiveness. You need to schedule your employees based upon the business's needs, not necessarily whether their wages are going to be forgiven or not. You need to make HR decisions based upon merit and business demands. You need to hire people if you need to hire people. If you need to fire people, you need to fire people. And don't keep people on payroll that are not able to work productively. So keep in mind, run your business like a business, and certainly we'll try to help you understand the rules regarding the loans forgiveness, but make good business decisions.
With that in mind, we know that there are a lot of questions are going to come up. It's an 11-page application for forgiveness, and so a lot of people are going to be concerned about that. Reach out to your CPAs, see if they're willing to provide support to you, or if you've got the in-house resources with your bookkeeping team to handle it. That's great. So for the more we're hopeful at least that our standard reports and some of the education materials that we're putting out have been useful to everybody. We've also added this applicable payroll cost expense report to track your costs during that 8-week period that is eligible for forgiveness, and some other components to rely on. And so what our logic is right now, that we're hopeful that most people will fit into Tier 1 and won't require additional help from us. But if they do, we're going to roll out these other tiers where we could provide a little additional assistance. And just to cover them real quick, and what our thinking is that one component would be essentially an extraction component where we would export salary and wage data based on this guidance for these different periods of time for comparison's sake, and supply it back to you so that you have an easier time running those comparisons. So we're thinking smaller employers, those with less than 10 employees, probably don't need to rely on us. They can probably just pull for anything more than we've already provided, that is. But if you do need more help, we're going to set up some other packages and we're working out the pricing and how to fulfill these packages a little bit, and we'll be coming out with those in the next week, hopefully. Something to keep in mind, I have to stress, is that all these FTE comparisons, that if we've tried to provide some to date or anything, the nature of this loan forgiveness program is pretty strict in terms of the language saying that it's based on a weekly period of time. If you run your payroll bi-weekly and you only supply us the total for a 2-week period, we have no way of knowing how to split those hours out. So keep that in mind. So the data extractions that we'll be providing will have to come from a timekeeping system if we do have them for the FTE counts. And of course, we can get the wage components from the payroll periods as well. And then some of our tiers we're planning on rolling out would be more of an advisory role, where we would actually help you all the way through this completion of this 11-page document if required by you, if you need our assistance to that degree. We'd be willing to do that. We're just trying to figure out fulfillment and how to be priced fair to everybody at this point. Probably is going to be a base fee plus a per employee fee, because larger employers are going to probably need more time spent than smaller ones, and different responsibilities as well. So anyway, we hope those and want some feedback on those before we roll those out, but that's our thinking at this point. And as always, stay tuned. More resources are forthcoming. We're going to do a deep dive on the whole application. Dad and I are looking really, really excited about that, I know. Hopefully everyone's staying safe, and stay tuned.